Like we mentioned before, we have Raghav Jindal, MD at Jindal Drilling and Industries, joining in with us this afternoon. Thank you so much, Mr. Jindal, for joining in with us this afternoon on ET Now. And obviously, we'll start by talking about the 3-year rig contract that you all have won from ONGC. So let's just talk a bit more about that, which seems like, this is a contract which is at a higher than the current rate that is there. But the oil prices are falling. So how are the rig rates expected to pan out going forward? Could you give us more of an understanding in terms of that?
Hi, good afternoon. So, ONGC had about 27 rigs under contract last year, and it's increasing its fleet to about 36 rigs going up with the current contracts. There's a lot of demand internationally and in the domestic market, whereas the supply of rigs is quite limited. So we envisaged increase in prices, and this is the result of that.
Okay, so the result is on account of that. But talk to me about the pipeline as well. Given the fact that the overall ordering and the visibility is strong, what are you doing in terms of increasing your own capacity? Because I'm guessing the capacity utilization for you currently should be very high.
So our utilization is 100% for the rigs that we have. We do plan to add a few more rigs to our fleet. We're not really looking at making new rigs, but acquiring some rigs which are there in the market and refurbishing it for the ONGC requirement. Also, we have one of our rigs in Mexico, which should be done with its contract in the end of 2025. So we plan to bring that back into India for ONGC.
Right. Also just want to talk about in terms of Indian explorers. They are, trying it hard to find the sourcing in terms of the rigs going to the higher exploration activity. So is there anything that you could expect in terms of that, or any pricing in terms of that you could give us an indication?
So the pricing would definitely be increasing in the near future. Right now, the current contract that we got was about 89,000. The peak that ONGC has seen was around 140,000. So we definitely expect in the near future to reach those levels again.
240, because this has been sub 90,000 that you have done. You're expecting a $50,000 per day kind of increase in the rig prices?
Yes, in the coming few tenders, looking at the international market and in comparison to the markets in the Middle East. We definitely would be looking at the rates there.
So that's a great time for you. What would it do to your revenues and margins then? Because I'm guessing all of this will be operational leverage that will kick into the bottom line.
Correct. So, we have one of our rigs which are under contract getting over by mid-25, and there are 2 rigs getting over with its contract in 26. So that's when we will look at the rates, higher rates for the rigs.
Okay, so net, I think that your run rate so far has been around 150 crore per quarter with a profitability of 20 crores. Where do you think you'll end the year FY25 with after this uptick does come in? Are you looking at maybe doubling your profitability? Because I know it's a very cyclical business. That's a possibility.
Yeah, so the revenues are definitely going to be going up year on year. Next year, we're expecting about 25% rise, and similarly year on year.
Similarly, in terms of both the revenue as well as the profit, we're expecting a growth there as well. Lastly, before, we let you go also, I just want to know, are you looking at acquiring any new rigs to increase the fleet level and capex level plans also? Is there something specific on capex?
So basically, we are on the scout for rigs. We have identified 1 or 2 rigs. It's still not as per the ONGC contract deals. We're expecting ONGC would change its. We're looking at a little change in the ONGC contract. If that happens, then we do want to acquire 2 rigs to be got into the ONGC contract.
Okay, thanks so much for making time and speaking with us. So that's the latest coming in. Looks like it's a bit of a Goldilocks scenario for them as well. From the 90,000 per day kind of levels, they're expecting rates to go up to 140,000 or more, and looking at getting more rigs to tap into this opportunity. One of the rigs is getting done with its contract in Mexico as well, and that should aid the momentum there.